Hello, my name is Igor Tomych, and today we are at Merchant Payment Ecosystem, and I'm conducting interviews, whatever is happening in the world, and especially for the payments. And today I'm with the Praful Morar,
Yes.
who is know a lot of things about the payments. And today we're going to discuss the design of the payments. So the first question is actually, when we're talking about the global payments, what merchants getting wrong about the emerging markets? Because I assume if you are doing the payments for United States or European Union, it seems to be quite well known.
Yeah.
But global payments, sometimes they having trouble. So what do you think they getting wrong?
Yeah, so first and foremost, when you have, thank you for inviting me, so we're super excited about this. First and foremost, when global merchants really look at payments in their own domestic and regional areas, they know it, they understand it, it's very known to them. But when you go into emerging markets, really complicated emerging markets like Southeast Asia or more so the Indian subcontinent, you actually have very fragmented ways of doing business, which means India would be completely different to a Nigeria, for example, versus a Singapore, which is very digitally driven. So what merchants generally find is that when they enter markets, they're coming with the mindset that it's actually, what we've known in our market, it will be relevant in the emerging markets. And that's not the case. They really need to dig deep, go with partners that understand the market, are in-depth, local, and help you support on that basis. So that's one of the biggest areas people miss out when they go and expand.
Yeah, that's definitely the case, because even with the European Union, the adoption and the local banking rails vary from country to country.
Yes.
Like one of the case in Poland, everyone is using Blik instead of the card payments.
Yes.
Even in Żabka, like the corner street shop, you will buy with the local payment rail instead of the card in this case.
Yes, exactly. And also, if you just look at most of the time, merchants think that everybody takes credit cards and debit cards. But the lo and behold is actually that's not the case. So if you really look at India, for example, UPI, Unified Payment Infrastructure, it really covers 85% of the market. Without that, you can't touch it. And there's no cards. It's just a local payment that they're actually doing. And it's bringing that capability and a partner that actually helps you bed in to those regions.
So knowledge costs more than integration, and this finding the partner who has a knowledge for this specific market values a lot.
For sure, because what actually is that happens is that people, especially global companies, they think they can adopt their global stature into a local market, but often they want to sort of have the user experience that they've had globally. That's not the case. In emerging markets, you have to understand what market you're going into, the payment structures there, and then the regulatory and the compliance requirements within the market that allows you to trade. And more importantly than that, how do you move money? Which is what this shows all
and
about.
liquidity is it's a big question usually. People underestimating the impact on the business, because you might be thriving on numbers, but with the liquidity and cash flow, it might be an issue.
Yeah, and also emerging markets, liquidity is a challenge. There's stable coin, there's fiat, there's other ways of actually doing things. But keep in mind, emerging markets often have currency controls. And when they have currency controls, they're trying to protect their region, their country, in movement of money without deflating it, right? So these are the things that merchants, specifically global merchants, need to understand what they're doing.
And what do you think were the biggest avoidable leakage that in cross-border payments performance right now?
For me, is the natural assumption that in every country there's credit cards. And the truth of the matter is not. Credit cards are really powerful in places like the Western Hemisphere, very powerful in the likes of Europe and so on. But if you look at really sort of emerging markets like Brazil, right, PIX is like 90-95%. It's bank-to-bank transfer capability, and it's often done on a person-to-person at almost zero cost, almost. Business to person, slightly different. If you look at India, which is a massive market, which does UPI, it's the same concept. Credit cards are very small. You have to know the market you're going into. So this is one. The second area is that when you enter a market, do your research. Understand who your users are, what are they used to, and also products. what you're selling in the Western Hemisphere is not exactly the Eastern Hemisphere.
It's not copy-paste.
Completely different. And that's what I believe that are the pitfalls for not doing your research and talking to suppliers and partners that actually understand that local market in that local language.
Thank you so much for the discussion.
Thank
You,
you. I appreciate
you
it.
explained a lot to our listeners, so I think they will appreciate it. Thank you for joining.
I appreciate it. Thank you.
Thanks.